Raise your paw if you think that the stock market has reached its all-time high and it's going to crash now. You are such a bear. What's up, everybody? Michael and Coco here. You're watching the Stock Market Brief Show. The bull market continues, but it's on some shaky ground. In today's video, we're going to be going over quite a bit of charts. Let's get into it. Let's first start off and look at the 11 sectors that make up the S&P 500. We're going to look at the week-to-date performance. So last week, energy and financials led the way. Energy up 5%, continues that ballistic run. Financials up 2.2%. And financials really did quite well because of the 10-year yield, which actually puts pressure on the tech, which you can see here down towards the bottom of the ranking. If we look at the relative rotation graph, so you can visualize to see the 11 sectors and how they're performing in the last 5 days of trading comparatively to the benchmark SPY. You can see here energy way up there in the top right. That's a good sign. That's leading quadrant. They've been going completely ballistic. Wouldn't be surprised to see them eventually here take a breath, but it's been just ripping. Financials too in the leading quadrant. You can see industrials also heading that way. Let's take a look at the 10-year yield. The 10-year yield is continuing to break out of this little compression pattern, and we talked about this. If it breaks up, we can look at 1.75. or 17.5, however you want to look at it. If it reaches up here, that means the 10-year yield is going to be at 1.75, and it looks like it's heading that way. To be quite honest, it looks like it's just bursting out there, which is going to continue to put pressure on the big tech names, which also can kind of postpone the S&P 500 from continuing its rally higher here. But we'll see what takes place. We got a lot of charts to go over today. TLT, which is the bonds. You can see this is breaking down. So this is breaking down from its bear flag. Meanwhile, the 10-year yield is rising out of its bear flag. Let's take a look at the weekly performance of the Nasdaq, right? Because the Nasdaq 100 has a lot of those big tech stocks, right? So it's going to be very hard if the 10-year yield continues to rise for the Nasdaq 100 and even the S&P 500 to really perform here. But what I want to call out here, what some people may notice, but we have a 30-week moving average. It tagged it perfectly. It's tagged it perfectly before. But this isn't the first time we've been in this situation. Let's go ahead and highlight these three candles right here. You can see this candle, it tagged the upper 5 weekly EMA and tagged the 30-week EMA, 30-week simple moving average right here. And now we're really doing the same exact thing here as we did here in each of these last two times. So this is the third time this happened this year. We rallied higher. So are we going to rally higher? Well, we can't predict that, but what we can do is this. We're above the 30-week moving average, so the bull trend is still there. It remains on shaky ground because of the infinite amount of narratives out there as to why the market will roll over and continue to roll over. But what we can look at from a smaller time frame is this. If we start breaking above the weekly high, and the weekly high was at 15,010, so if we get a weekly close above 15,000, we can head higher. But if we close below the 30-week moving average, well, then we could go into a lower territory and or a period of consolidation. But as it stands right now, the 30-week is still moving up. Now, why is this important to look at the 10-year yield? Well, let me just show you a side-by-side comparison here. So we have the Nasdaq 100 up ahead of us. We have the weekly 10-year yield below us. So when the rate at which the 10-year yield rises, it puts pressure on the Nasdaq 100. You can see here, it rose, and then it fell right there on the Nasdaq 100. And then there's that little highlighted blue square right there that we just recently talked about. And then what happened? Well, the 10-year yield started to sink. Guess what happened? Nasdaq 100 started to rise really quick. The Nasdaq 100 was falling. Meanwhile, the 10-year yield was rising. And then it went through a prolonged period of the 10-year yield kind of falling here for 1, 2, 3 months here. And the Nasdaq 100 really started rallying quite harder. Now we're starting to see the 10-year yield rise, and what's taking place? Well, the Nasdaq 100 is getting the pressure. So what can we read from this? As we're pinned between these key moving averages, if the 10-year yield continues to rise, well, we can get more pressure on the Nasdaq 100. However, we are reaching not too far away from an area of resistance. So this is telling me that we could probably just see an inside trading week, which means that we're going to be trading within the range of this last week's candle. But it means just to prepare yourself, because if we do start breaking above the high and or above the low, we can switch our position and switch our sentiment. If you want to take a look at the yields overall, just look at how fast that they're moving up. The long term, we have the 30, we have the 10, we have the 5, and then we have the 3-year. They're all pointing up. You can see here the spreads, the 10 and 2, and the 30 and 5. The 10 and 2 is starting to rise, and that is really good for financials. Energy as well has been performing very, very well. S&P 500 on the weekly time frame also pinned between these two moving averages. So we're going to be looking at it like this. The 30-week moving average, it's continuing to trend up. So that's a good sign, right? So it's in bullish context. However, we tagged it. Okay, so if we start getting below it, we can see more downside potential, potentially even around 4,000, which we discussed, 4,000 to 4,100 on other videos, because those are some key support areas on monthly, quarterly time frames. If we start getting above the weekly high, that could be a good sign where we start heading higher. I want to call out this. Momentum has been dying off for a while. We had this bearish crossover here in June take place. The price action continued to move higher, and the price momentum oscillator has continued to diverge and is still pointing down. So, you know, it's a bull market, but it's on shaky ground. That's just how I can look at it. The Dow Jones Industrial Average is getting very, very compressed here. You can see all the moving averages coiling tighter and tighter together. And for the last 3 weeks, we haven't really gone anywhere. Actually, even longer than that, we haven't gone anywhere. We've been trending sideways. Okay, so we're really just pinned between these two moving averages. It looks like we recapture the 5 EMA ever so slightly. Let me see here. Weekly 5 EMA is 34,706, and we close at 34,746. So yeah, by a few points there, nothing crazy. So start looking for a potential break above 35,000 or a break below right now, and pay attention. The price per momentum oscillator, there's wind in our face, right? It's still pointing down, so momentum continues to diverge. What, from an interesting standpoint, check this out. Transports have been diverging from the industrials for quite some time. It's been heading lower. Meanwhile, the industrials, that was heading higher at the time, but this has been diverging. So what I want to call out here is it's been over a month now that we've been closing below the weekly 5 EMA, and we just closed above the weekly 5 EMA, which is really good, but it is a little concerning because oil is rising rapidly, and you would think that transports would continue to fall because their biggest expense, well, is oil. But we do have the PPO, the histogram, it's pointing up right here, and we have this kind of curling up, and we have the RSI back above 50. So this is actually a positive development. However, let's look at the 30-week moving average overlaid. It's right under 15,000. It's still in bullish context, but the price is beneath it. So in order to feel a little bit more confident about this, reclaiming this territory, we want to see a weekly close back above the 30-week moving average. As it stands right now, it's flattening out to become neutral. So it's bullish, but if it flattens out, that becomes neutral. And when it starts declining, that becomes bearish. Let's take a look at the IWM. The IWM continues to trade in a range pretty much the entire year almost, right? So this is just really not gone anywhere. We have an indecision candle, another indecision candle taking place. Price momentum oscillator is continuing to diverge. Not really diverge, but it is pointing down as the price action remains just within this channel. So one, if this starts breaking down, that's going to be confirmed. If it starts breaking out, we want to see this cross over, and that'd be very, very bullish for small caps. Now, small caps typically do well in the environment where the yield was rising because of the fact, well, a big percentage of small caps is financial stocks and energy stocks. Here's a couple concerns that I want to kind of really go over. This is on the 60-minute SPY time frame, and we have the trend. And every time that it reaches down to these red lines down here, we have some price action that gets a little bearish, as you can see. Boom. The last time we called it out was right here. Then we had it happen again. Now the trend indicator is pointing down towards this range again. It doesn't mean that it's going to get there, but if it does get there, could spell that we have some more downside movement in the S&P 500, something to be aware of. Meanwhile, the VIX, has been in this choppy sideways range. We broke down, but it's interesting because the price action really didn't do too much, even though the VIX was falling. Now we're kind of at this falling wedge, and we have a positive divergence taking place in the volatility index, which could mean that we could potentially pop right back up, retest this trend line. It could act as resistance and potentially fill that gap above us. We still have two gaps beneath us that can act as support. If we take a look at the dollar, massively doing nothing, right? It's just been trending sideways here. And as we know, at the rate at which this moves to the upside, it puts pressure on the S&P 500. This continues to kind of just consolidate here. So if we get a big movement to the upside, I think that's going to continue to put pressure on the S&P 500. If we start sinking down, which the last day on Friday, we had a bearish engulfing, but really it can't put too much weight until we get a confirmation. I'd say if we start getting back below this green line, that'd be pretty positive for the financial markets, including commodities, but we're just not there yet. If you take a look at the weekly time frame, it was an inside trading week. So we had this big run up. Now we're getting a little bit of a pause, a little bit of indecision, basically saying, okay, do I want to continue this run up, or do I want to pause a little bit more, consolidate, build up some energy and then head higher? That's a strong possibility. We're not there yet. Indecision, inside trading day. That means if we start breaking above the high, which was 94.46, you can call it 94.50, that's a positive sign for the dollar. If it starts breaking below the low, which was 93.68, that's a negative sign, obviously, for the dollar. Now, the lumber to gold ratio has been risk off. Now it is approaching. It probably will go risk on by next week if things continue the way that they're continuing. The rate of change, the 13-week rate of change is at minus 1.63%. When it crosses above zero, that is a risk on type environment. And the last time it flipped to risk off was here in the middle of June. And as you can see, when we flipped off, we headed higher and then fell down, and we really haven't gone anywhere since the price of June. So the indicator actually worked quite well. If you want to learn more about this indicator, Michael Guyad's the guy to go look up on Twitter and or go to his lead lag report, or even read his white papers. I've interviewed him twice on this channel and it's helped out quite a bit. Let's hop into some daily time frames. Daily time frames, what do we got going on? Well, first off, we have a red area of resistance on the SPY. This is just this downward sloping trend line. I think if we can reclaim that in the 50-day moving average, there's no problem here. We can head higher, probably go tag that upper Bollinger Band right at around 44750. The possibility is this, a potential inverse head and shoulders. So I want to just kind of call that out. We have a left shoulder, we have a head, and this might come down to fill this gap, maybe round around, and then try to break through this. If that doesn't happen, well, I mean, shoot, we can still fall further, right? This short-term trend, we have a high, lower high, lower high, we have a low and a lower low. So the short-term trend is bearish. However, when we scoped out and looked at the weekly time frame, it's a short-term trend that's bearish and a longer-term bullish trend, okay? The Qs, pretty similar, but a little bit weaker than the S&P 500, and that makes sense with the yield rising. So what we want to see if you're bullish is the yield to kind of take a pause and or start sinking down, cooling off a little bit to see this start taking off. So you can see here we gapped up, and when we closed down, it looks like it wants to come fill this gap, but we did reclaim the 100-day moving average, so that's a positive sign, and we're still beneath this trend line. The 20-day moving average, that's the shorter term moving average, and then we're still below that too as well. The price percent oscillator is also trying to curl up right here. So overall, very short term, we have a high, lower high, lower high, and then we have a low and a lower low. And when we get into the 15-minute time frames, I'll show you, a little bit more of a breakdown of what this price action looked like. If we take a look at the daily time frame for the IWM, still consolidating, right? Still coiling up here tighter, building up some more energy. When this thing bursts, it's going to burst out, and it's going to be a very fast mover, right? So we're just continuing to be just patient here, right? If we break down from this, we can go test 210. If we start breaking down from 210, buckle up, because it can get very aggressive, especially with all this energy that's just been building up and consolidating. And then if we break above this 232.50 range, that can be very, very positive. That's what I'm rooting for. But we're just not there yet, so I'm not jumping the gun. Dow Jones Industrial Average, like I said, continues to be in a sideways chop range, and we had an inside trading day. We're above the 20-day moving average. We're back above the 100, but we're still below the 50-day moving average. Still, same story goes. Short term, high, lower high, lower high, lower high, and then we have a low. We have a lower low right there. So this is continuing. It's not really in a bearish trend to the downside or a bullish trend. It's really just going sideways. So we need to see it get back above 35,000. Or we need to see it crack down through 33750. I'd be shocked if it does start cracking down through this range. We have the 200-day right there, but by the time it gets down here, we'll probably have the 200-day moving average more up around 33750. So it's going to be in a confluence area of support. So if that gives way, holy moly, watch out. It can get pretty violent pretty quickly. Let's look at the 15-minute time frame. So the 15-minute time frames on the SPY, I want to just point this out. We've been seeing a lot of volatility, a lot of back and forth, crazy price action. It's been very hard to judge. But as you can see here, we've been putting in, a high, lower high, lower high, lower high. But if you were paying close attention on the 4th to the 6th, we had a high and a higher high. Now, in order to keep a trend down, you need to have a low and a higher low. In order to keep the trend down, this would have had to extend past this low to keep the trend down. But we put in a higher low, and now we put in a higher high. This could be very well flagging. We have back above the 5-day moving average, so that's a very positive sign that can act as support. So it's in confluence with this, and in confluence with the 5-day moving average, and in confluence with this gap here. So if we come down, that can present an opportunity to play a bounce. Just be careful, right? We have a gap above us still there too as well. Same thing with the Qs. Take a look. We have a high, a lower 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 high, and we had a low, a lower low, a lower low, a lower low. But then all of a sudden, if you're paying attention, all of a sudden we had a higher low and then a higher low, and we started seeing strength. The bulls started getting more strength up into this area of resistance. Then the energy built up, we popped out. Okay, that was that gap, that overnight, which we also talked about in the previous episodes. And now we're back above the 5-day moving average, right? The purple line still pointing down to rather neutral right now. We have a gap above us. This is kind of wedging right here. So if we break out, maybe perhaps we come fill this gap. And then we have this area just in confluence of support here for the Qs on the 15-minute time frame. IWM closed pretty much on the 5-day moving average. Not much going on here. This could very well be wedging. We have a gap beneath us, a gap above us. Those can both act as areas of support. So not much going on there. You can see the purple line, right? That's the 5-day moving average. Looks like a spaghetti noodle, so it's rather neutral. The DIA, so this is Dow Jones Industrial Average ETF. Take a look. We had a high. I keep doing that. We have a high, a lower high, a lower high, a lower high, lower high. But we were coiling up. We had a low, a higher low, a higher low, a higher low. So, and just look at this volatility between there, just all this chop range. And because we couldn't break through these areas during the cash market, guess what happens? We gapped over it in the overnight session. Okay, so this area will act as an area of support. We're in confluence with this trend line here, and then we have the 5-day moving average start to incline. Overall, though, you can look at the 5-day moving average. It's like a spaghetti noodle here too as well. So it's not very clear, kind of wedging right here. So this could be a bull flag forming potentially. I'm not putting too much weight on that. I just don't see the trade yet. Let's take a quick look at commodities. Continue to ramp higher and higher. Just insane. And what's so crazy about this? Think about this. We just talked about the dollar recently. Commodity index up, what was it? Over 2% for the week, right? The dollar hasn't gone anywhere. The dollar is actually remaining relatively high. Now, commodities, they have an inverse correlation with the dollar. So when the dollar falls, commodities typically do really well. But look how good commodities are doing right now with the dollar relatively flat to elevated a little bit. That's kind of concerning, right? Because if you really think about it, people are saying inflation is transitory. I don't know if I believe that, right? Because, I mean, just look at the CRB index. Now, a lot of this has to do with energy costs, so things can change, but energy is spiking. This is bringing the CRB index up. Energy makes up a big portion of the CRB. Then it also has agriculture. Then we have some precious metals, and then some base metals, etc. Okay, so this is continuing to rise, and the dollar hasn't even really sunk yet. So if the dollar starts falling, I mean, to me, it says that oil can go higher, energy costs can go higher, agriculture can go higher, etc. And yeah, this continues to just really rip, and we have a bullish crossover taking place right now on the PPO. So I don't know. I just found that to be quite interesting because if the dollar does fall, holy moly, I just feel like, yeah, it's more stagflationary, right? So we'll see. Let's take a look at oil. WTIC continues to really ramp up higher, right? We broke out of that. We back tested. We ripped higher, put in a little bit of a shooting star candle. We touched $80 up here, and then we reversed from that, so we didn't close above it. Might need to take a little bit of a breather. We're getting pretty extended from these moving averages, so don't be too shocked if we start pulling down, but we'll continue to just watch this and see how it plays out. Gold not doing much. On Friday, we had a pretty bullish move to the upside, but it got completely faded, so, it finished that day down actually $1.80, so not really going anywhere. Could be very well still this inverse head and shoulders. Continue to monitor it, right? It's just been going sideways. The trade is not quite there yet, but it is trying to set itself up. Whether that is a short setup or a long setup, I don't know. I'm long the physical metal and silver, and that's not going to change. I just have a small portion of my portfolio into that. Silver broke out of this wedge, right? We reclaimed this area of support, so that's a positive sign. We saw a really big strong day, very similar to gold, but we started getting faded. We still have a positive divergence on the PPO and the RSI taking place, but we're below all these key moving averages, so it's on shaky ground. We have wind in our face, but it could present a good opportunity, right? I mean, it's a good risk to reward if we started getting into stuff down here, okay, and then it starts heading higher. That's a great trade, but if it breaks down, okay, yeah, just get out of the trade, right? I mean, it's the risk to reward is great, right? If the reward is all the way back up here, and then the risk is let's just get out if it takes out this low, it's 1 to 3, right? You risk in 1 to earn 3 right there. Last, let's touch on Bitcoin. Bitcoin continues to flag right here as it broke out of this key area of support. The buy signal was triggered on that Sailor to Shift rotation tool that we put together. So yeah, we'll continue to just monitor this, see what happens. It's a very bullish sign. Maybe look for a back test, maybe right around 50,000. See if that happens. If it doesn't, it is what it is. That could present a good opportunity to potentially go long or add and then see it go higher if that's the case. Always manage your risk and be careful out there. But that's all I got for you on today's weekly recap, everybody. Hope you're all having a wonderful weekend, and I will see you back here most likely on Monday.